All right, guten Morgen, happy Monday. Mondays are the greatest days because it means we have another trading week. Awesome. So, anyways, let's get on with the QB because it's 7 a.m. on Wall Street, about 2.5 hours before the open of trading. And it's our time to get our global macro on, uncover the best fundamental opportunities, sentiment, check. Inflation, check. Employment, check. GDP, check. Trends, check. Hey, we have to do the COT this morning, check. Seasonality, check. We also uncover the underlying intrinsic trend that is not easily seen. And it'll tell you when to be aggressive in the market and maybe when to stay out. And what the way we do that is we look at a whole bunch of independent markets, really different trading pits, if you will. And how are these traders trading? How are these traders trading? How are these traders trading? And we can discern the underlying intrinsic trend or the lack thereof, and then align up our trading with reality. Very super important. Costs a little bit of money. Everybody that's in the live meeting is a member. If you're watching this on YouTube, time to step up, son. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Go into the dashboard. Just quickly, today I'll give us our little review. So, right before London opened, right just before the open of trading in London, Bitcoin went from a -4 to a 5. Kiwi Swissy went from a -4 to a -5. Euro CAD went from a 4 to a 5, and Kiwi Dollar went from a 4 to a 5. So interesting. And then now, before New York, it highlighted kind of the same thing to let the New Yorkers know that the things that they should look at today include Kiwi Dollar up and Kiwi Swiss franc down, which is strange, isn't it? Yeah. So could be mixed, you see? So that's part of this AI alert service upgrade. No big deal. Let's go to the pro. Boop, 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 boop. Let's get big. Okay, yields are up a bit. Boo. Oil back around 80. Hey, 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 hey. Interesting. That could be an opportunity. Gold at 2440. Well, when it was at 2250, our goal was to get it to 2500. And we're pretty close there to that first initial target. So nice move. Nice move. S&P 500 at an all-time high. Lovely. I got a lot of S&P 500 every which way but loose. So that's really good. Nice. Euro dollar on its way to 109 and Bitcoin 67. Oh, nice. It was significantly lower not long ago. Looking at the QB, let me zoom in a little bit. And still very bullish on gold, still bearish on dollar. So all that's risk on. Okay. So that's either bullish on the Canadian dollar or bearish on the US. Seems like we're selling dollar here, we're selling dollar there. Aussie Swiss franc and Kiwi Swiss franc. Interesting. So that's your hit list today, your watch list. You should go to your charts and update your scores. Oh, my camera's in the way. The cow's mistake for hay. There we go. All right, let's take a look at what kind of risk is in the market right now, and some risk on. Very nice. Last week became risk on. In fact, about 2 weeks ago, a monthly bias. So we have a lower CPI, lower NFP, lower ISM, lower CPI. And what this leads to is if the Fed is going to cut, well, they can, maybe. But the data's not holding them up. Maybe, but it's being interpreted as risk on, not because of all of that is good. All of that is bad, but that bad leads to good if you like the idea of the Fed making money cheaper. So anyway, so we're definitely some risk on. Like when you look like month over month, the S&P 500 is up 6%. Yeah, that's pretty good. Volatility is down 54%. Yeah. That's good. Yields are down. That's good. Like there's stuff going on. Dollar's weak. That's good. So yeah, you can be a risk on investor. You can. That's what's going on. Okay. This is there's quite a bit going on behind the scenes right now at at the QB. Lots of things are being upgraded. New data is being added. So things like this score going above 8, well, the scatter plot can't handle it because it wasn't designed to go to 12. So anyway, so this is being updated to account for that. So the team is aware. There's a lot of upgrades going on in the background right now. A lot. Anyway, silver's kicking butt. Yep. Okay. You're right. I own some silver. That was nice. Copper. On the bearish side of the uh, of the scatter plot, but up today. We can look at them on their own, and so oil hasn't done anything. Platinum hasn't done anything, but copper and silver is up, and we can't see gold because it's like 10, 12, 14, or something, and it doesn't even fit. It's so far to the right that we can't even see it. So that's being adjusted. Bitcoin flat. Okay. The Russell is down, but not by much, 0.1. Remember, these are small companies in the United States, and they're most sensitive to interest rate changes or lack thereof. The yen is weak and the Japanese stock market is up. That's normal. It's up, 0.75%. That's a pretty decent day. Okay. DAX is up a little bit, and it's expected to, so that's normal. Actually, so Russell's up. I think I misspoke. I was thinking it was down a little bit. It's up slightly. So these are all up. Everything is up. So, is that a sign of risk on? Yeah, maybe, huh? What's going on here? Kiwi is weak and Aussie is weak, but they have positive scores. This might be a buy a dip scenario. They're dipping. They're down, okay, but they're supposed to be up. Now, part of this fundamentally, you may know that the Chinese government late last week came out with a plan to stabilize the real estate market. And Aussie and Kiwi were way up recently. And so these could just be little dips, and they might be opportunities for you to buy. And that's exactly how you're supposed to use this scatter plot. You should see that they're fours, but they're down today. Could be an opportunity. looking at cross pairs. Okay. Kiwi is the weakest. You see Euro Kiwi up, pound Kiwi up, Aussie Kiwi up. Okay. Kiwi CAD down, Kiwi Swissy down, Kiwi Yen down. So Kiwi is definitely weak today. Okay. Can you see that? That's how you're supposed to be using the tool. And look at like QuantBox has a -5 on Kiwi Swissy. It has a -2 on Kiwi CAD. It's a -1 on Kiwi Yen. Okay. It's a +4 on Euro Kiwi. None of this is unexpected. Do you see that? This is what you're supposed to notice. This is supposed to happen. It is happening. So now you go to those charts and you follow through with your technical analysis. Are there opportunities technically? Let's review the calendar and then we'll do the COT report. Quiet day today. Canadian inflation report tomorrow. New Zealand interest rate decision tomorrow. Tomorrow. Right. Kiwi's week going into the meeting. Cool. Well, that's a market mover. Oh, for show. Then UK inflation. Okay. That'll be interesting. Yep. Could be good. I'm trying to buy a watch out of London actually right now. And prices are down for watches generally, but in particular at the London dealers. And then pound. Pound is weak relative to before. You have to remember there was a time when it was $2 and something to buy a pound. And you couldn't go to London. Everything was too expensive, right? A cup of tea was, $10. And you're like, what? So anyway, so now that it's down to a real price, everything is a little more amenable. But anyways, FOMC meeting minutes out on Wednesday. That's a good read. Can you envision yourself this summer hanging out somewhere beautiful and you're taking some time and you're going to sit down and you're going to read a fistful of FOMC meeting minutes? Yeah. I've given lessons on this before. I trained myself like a dirty dog, like a circus animal, to read things like the FOMC meeting minutes. And the way I did it is I rewarded myself. So I took economic reports. Now we do this every Tuesday. Oh, I have to remind you at Investor Boot Camp, if you're a swing trader, we're doing 3 meetings a week now for you. Let me say that again. If you're a swing trader, we've added 50% more meetings for you. Same price. It's because we love you. So on Tuesday, we review all the economic reports. Wednesday is sim day. Sim day. Right? It's a stop, look, and correct session focused on simulation. Right. And then Thursday is the swing trading uh, meeting focus on the technical side. So now we got technical analysis, self improvement, and fundamental analysis all included at investorbootcamp.com. Just okay, cool. So going back to this, there was a time when I'd do this on my own. I'd just read all the economic reports, and it takes us what, an hour and a half to 2 hours to do this on Tuesdays. Well, the way I trained myself to do it, and now that we do this event, I'm training you to do it. But I trained myself by sitting down on a Saturday morning very often. Um, the sun is out, the birds are singing, the air is soft, and I'd have a big cup of coffee and a big cigar, and I would read them and highlight them, and in a way, it was sort of a mantra meditation. Very often, I would highlight them and then think. Now, in our meetings on Tuesdays, I read them and then I talk about the the hidden meaning or the response or the social impact, and this is what I would think about when I did this. So these are all, you got to train yourself to say reading the FOMC meeting minutes is rewarding. Okay. Especially if you look at it like, oh my God, you with dread, you need to train yourself. And it's very Pavlovian, where you give yourself a cookie every time the bell rings, right? That kind of thing. Uh, French fries, no. Your German manufacturing, yeah, this is a big one. In particular, like Germany is a massive manufacturer, and these numbers are horrid. Oh my God, these are terrible numbers, and they're huge. What, like they're like the number 3 manufacturer in the entire world, or number 5 or something. I mean, it's huge. It's a huge manufacturing economy, and it's in the toilet. Those are bad. But they're like, "Oh, well, it's going to go from a 42 to a 43." Well, hell's bells. Yeah. So anyway, so we get an update on that. Could be interesting. Weekly claims, interesting. Of course, we want to see these numbers get bigger. If you want the Fed to cut, okay. And then we get our PMIs. These were fairly bad numbers, and we're just hanging in there, just barely hanging in there. Okay, this right. This is just the flash stuff, though. So ultimately, yeah, okay. And Friday, British retail sales, whatever. Revised, you Mitch, whatever. Going back to Thursday, I think at the close we have Nvidia reporting, and that could be a doozy. Huh? That could be a doozy. So what do you think? It's a pretty okay. It's light on the dollar news, and that's what we're worried about, isn't it? We're trading the dollar. I hope you're trading the dollar. Mhm. Just looking way out there. So on June 10th, we're starting summer school at Investor Boot Camp. I'll send out the I not itinerary, the syllabus. I'll send out a syllabus soon. Set it on your calendar though. Let's do a quick T bill and then we'll go back to the COT. And this move up gets us to a risk off. Oh, but we just had this risk on, boom. Yeah, sure thing. But not in the treasury market, not in the money market. What do you think about that? Uh-oh. Huh? What do you think about that? Uh-oh. So this green line going up, and in particular crossing above the 8-day average is not good. Is risk off. Ooh. Well, I suppose if you're in Iran, it would be a bigger deal. You know, it would be like this, Denise. If they said, okay, we're going to stop trade economic trades and business with the rest of the world. Oh, they're under embargo. Oh, that's no big deal. And then what if then the new government comes in and they're like, we're going to stop pumping oil because we don't like money. It's the only thing that makes money. Um, well, even then, they don't really export it to most countries, not, at least not legally or to some constraint. If they did that, then yeah, that would still end up being bad for the world because people do buy it. Somebody buys it. Um, so yeah, that would move oil. But what's the likelihood they would say we're going to kill the golden goose just to piss everybody off? No, it's it provides money. So like it's like not yeah, no. Yeah, yeah. So forget about it. Forget about it. So, anyways, a little bit of risk on. I wanted you to notice, right? I want you to notice when I'm not around. All right. Cool. Let's first of all, you want to look at the capital stock. The market is selling Swiss franc and selling yen. That makes sense. Okay. This economy is cutting their interest rates. Okay. So the market, and this is institutional investors that are large enough that they're required to report these positions to the government. Yeah, they're selling Swiss franc. They wake up in the morning, they sell the Swiss franc. Okay, fine. Now, QuantBox may not expect that, let's say, when you add up the macro data, but the reality, right? Because it doesn't think. The reality is the Swiss franc is weak because the central bank is cutting and the other central banks are not cutting yet. So if they're the first, they're going to be the weakest. Okay. Well, there you go. Okay. Yen is also weak. Okay. But, okay. All right. Then you have CAD and all this. All right. SP 500 and NASI fit in the middle. Remember how this stuff was way out to the left? Okay. You have metals moving to the left, which makes them stronger. Oil, Dow, silver, gold. You see how their physicals and still quite a bit of financial assets. Well, I guess I shouldn't say quite a bit. Dow is still very heavily long, but NASDAQ and SPX are 50-50. So this is a little bit of an outlier. Now, the Japanese stock market is because the yen is so incredibly weak, despite their intervention. And I had a long talk with the day trading group last night about that. But nonetheless, this still makes sense, this play. This is a yen play. It's not really a stock market play. Okay. So commodity, 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 commodity. Okay. And so this is the capital. This is how much is in the vaults. Okay. Now, the next thing you want to look at is the change. And a lot of money went back into the Japanese stock market. Well, it came out during intervention and then went back in. Now, again, using the discussions at investorbootcamp.com, I was incredibly clear that as the stock market fell and the yen got ripper strong and yen pairs dropped 5 or 6 or 700 pips, I'm like, it ain't gonna work. And it's gonna go right back up. And you can just see, right? Not only have you seen the charts go back up, but now you see like um yeah, those that were short got out. You can see it. There's a huge change week over week. What were they doing? Everything that we were doing. Okay. Remember, I bought multiple yen pairs at the bottom and it was all started going back up. So I wasn't the only one. It's a standard operating procedure for those who have been around. They know how to trade intervention, and I've taught you. And now this is proof, if you will. Nobody even bought it, they just stopped selling. Cool. Cool, bro. Cool. Money went into the Dow. That's interesting. I would have thought Nikkei, or sorry, not Nikkei, Nazi. Okay. Platinum. All right. Interesting. Some risk on. People were buying platinum. Okay. A real battle going on here on yields. Look at that. 66,000 went long and almost the same amount went short. Well, actually, I'm not reading that right, am I? Yeah, no, no, no. 66 went long and we lost 67 going short. Yeah. So it's a very bullish move. 15% increase in longs and a 7% decrease in shorts. Yeah, very interesting. This is one where the Russell people went long and short. Euro, okay, gained bulls, lost bears. That's very bullish. So yeah, we're still 50-50, but the pendulum is probably of swinging. And as dollar up here, if you look up top, as dollar shifts to the right, which is risk on, euro's going to shift to the left, which is risk on. And so that's an interesting swing if you're like, huh, are we going to go from 109 to like 115? Well, that's what you're trying to figure out. Where are we going to be at the end of the year, right? And that could be part of your thesis. Less bears and more bulls is very bullish. Oil, people just got out of it. They're still long, but everybody's out. Look at everybody's out. Bulls are out, bears are out. Okay. Yen, again, people are just shorting the heck out of the yen, which means they're buying yen pairs. Pound, people got out of pound. Bulls and bears got out of pound. Okay. Money did go into gold. Money did go into gold. All right. All right. Okay. And then the stock market, people are selling. And remember, they're not selling to hedge. We've already pulled that out of the data. They're selling for profit. Now, there was a short squeeze in copper last week, and it's not reflected in this data. So, I believe that person has lost a lot of money because people that's what a short squeeze is. Um, and if you don't understand, there's an episode in the show Billions called The Short Squeeze. Maybe that'll be a good example where Axelrod is very upset because he's being squeezed. Um, yeah. So anyway, copper, there was a short squeeze last week, but it was after Tuesday. So this data was released Friday at the close. So it's the newest data provided by the government, but it took them days to build a spreadsheet. And apparently they have no automation. So this was reported on Tuesday to the government, and then the government reported it to the market at the close on Friday. So next week we're going to be able to see that short squeeze. Somebody was heavily short copper, and somebody traded against them. So there was quite literally a financial war going on. Euro dollar right now very flat-ish. Okay, but we're wondering if this is going to change, eh? We can look at like a euro yen and see how this is turning out. Okay. Just over the last month, a slight increase in demand for euro and well, still very, very, very bearish on the yen. But look at that, huh? This is the price of the euro yen going up, and nobody was even buying euro. It's stunning, isn't it? Denise asked a question. I'm sorry, I just saw it. The copper lifted the Oz. I wouldn't think that way. No. Yeah. So, anyways, look, this whole period, demand for euros actually falling, and euro yen is going up. It's pretty interesting, huh? What else is going on? See, this is how you should be using this tool, and I just want to point it out so you can play with it. Look at this. There's more demand now for the dollar than Bitcoin. Look at the swings in the dollar. But it's slowly been climbing up, right? Slowly climbing up. But it's very slow. Okay. And notice that Bitcoin tends to do fairly well when the dollar is weakening. Cool. So I think that's well, let's do one more. Let's do one more. Silver was a big performer. I had 2 or 3 trades on that last week. Simon says not many traders for Kiwi. Well, it is a major currency. So there are plenty. Is it the number one? No, but there are plenty. Yeah. Kiwi is a wonderful thing to trade. Some of my best memories have been trading Kiwi. There was a time when they were intervening in the market, and it was fun and exciting. So, like, definitely don't tell yourself, "Oh, you can't trade Kiwi because nobody trades Kiwi." Uh, no, you're wrong on that. So just be careful. But yes, it's it's a smaller currency, but it is very liquid. Yeah. Okay. And in particular in Asia Pacific. So during the Asian session, when you're trading yen, you're likely trading Aussie and Kiwi at the same time. Like that would be a standard operating procedure for me during the Asian session. So I've been teaching you with a high inflation that you want to own real assets, and we're seeing this more and more coming to fruition. Where look at our best winners over the last 7 days. Silver is up the most, followed by platinum and copper and gold. And you're like, dude, they're all of them? Yeah, all of them. So I just want you to remember stuff like that. That's all. Okay. Stock market's recovered, as we can see. Some things are lagging. Oil is still probably an opportunity. Remember, there's still some seasonality left in oil. Yields are down quite a bit, 2%. That's good. I'm very happy with that. Okay. Rand trying to get something going very heavily, you know, it's all about the dollar. So if we're risk on, hey, investing money into South Africa is risky. There you go. Okay. But that's an opportunity because they have a high yield. They'll pay you for it. Right. So if you want to be an international financier, but I usually prefer peso over rand, but that's me. Dow 40,000. That's a record. Where's the SPX? NASI, uh, Russell, SPX. There we go. That Dow, sorry, SPX 5,300. That's a record. Okay. Big, big numbers. Just going back to seasonality, let's end with that. I just want to look at oil. We're here, and this is usually the shape of the oil market. So when oil is down, if you find the technical support and then the technical reversal, there's some potential in this asset. And once again, this is how you use this tool, where you can you look at this and you're like, oh my God, we could be way up here. Yeah, a 20% move in oil. That's nearly $100 again, right? From 80 to 96. It's potentially in the cards. We don't know, but that would be normal. Normal, I'm telling you. It's good to know. Man, QuantBox is awesome. Okay. To be able to see this, yeah. So when I see, oil down, could be an interesting opportunity. And that's it. I'm spent. I'll see you over at Forex today at 9 a.m. So what? A buck 20 from now? Looks like it'll be an okay, maybe even boring week in the markets, but nothing to really push back. If the market wants to collapse, it'll collapse, but probably not. And the big event on the calendar may be FOMC meeting minutes, followed by NVIDIA. Well, that's not too bad. That's a pretty thin week, right? So, not a lot to be afraid of. So, trade it easy, baby. Trade it easy. So, peace on earth. May the pips be with you. May your profits be above average. Um, and today at Forex Today, and I have to think about this over the next hour and 20 minutes. I want to talk about last week's trades, and I don't know how to do it. And I talked with the day trading group last night. And here's the backstory. Going in to last week, I prepared the day trading group. I'm like, let's talk mathematically about how to succeed. What kind of how do you succeed as a forex trader? And you need to trade more. I don't care if you drop your lot size, but you need to trade more. You can't have one or two trades and do this gig correctly. You need to trade more. And but we also addressed, psychological issues with that and some risk management last week at Forex Today. I also went over, portfolio construction and management and risk adjusted returns and beta. And so we've had all these discussions. And then last week, well, I tried to follow up the discussions by actually trading more on this trading account. And I ended up making too much money, which is a problem because it becomes a distraction and not a lesson. And so I killed all the trades. I accidentally killed that Hong Kong trade that I've been in for 3, 4 months, and I regret that. But I closed the trades because um, it it showed well. First of all, it's a distraction. You focus on the money, the money. You know, the second part though is it was giving a false confidence where I don't want to make 12% in a week. I don't want to make 12% in a month. A 12% is a quarter. So for me to do it in 4 or 5 days is a bad lesson. That's not the reality I'm trying to but I did it. But the real message is holy crap, trading mini lots with $30,000, I'm still over leveraged. Like you're not supposed to do that. It shows I took way too much risk. And you're like, but Wayne, it's mini lots. You're like, some of you might be thinking, well, you got 5 grand in your account and you're trading mini lots. You're over leveraged. You're going to blow up your trading account. So I killed all that. But I thought what I'm going to try to do today, and this is really a lesson for everybody in our community, YouTubers, investor boot campers, right? So all the boot campers, all the swing traders, day traders, TRADARS, I want everybody to get the message. And so I'm going to try, God help me. So I'm going to pull up the live, I'll just pull a report off MT4 and we'll look at it and see the positive lessons of how to trade properly. But bear in mind, it's not the percentage return I want covered because that's actually a bad lesson. Okay. So help me help me keep the discussion over at YouTube. Help me keep the discussion focused on proper trading habits and not getting rich because that's the wrong message, right? Yeah. But that's what everybody wants. And that's what scares me. I don't want to give them. Well, JP is well, that's not the problem. The problem is The only way you can make that kind of return is if you're over leveraged. That's what the problem is. No, I know you're kidding, but we're all thinking it too. But the issue is it clearly shows that it's way too much. And so I just because to do that with mini lots in a week or so, with I don't know 27 trades, that's not a lot. Like it was too easy, and that's not the message I'm trying to get. We're supposed to be patient and disciplined and focused and conservative and all these different things. So, um, uh, uh, y- you know, yeah. Well, Jim, I think you need to move into swing trading, right? And for that, I don't think you need that. But to each his own. But so anyways, you see how delicate and complicated like such a simple topic is. It's complicated and it's delicate because um, I want you to learn and succeed. And so I'm going to have to make fun of myself, right? And it's a weird situation where it was too much money too quickly, and that would be it's to me it's an obvious mistake. And I was just trying to follow up with lessons I give at boot camp, right? So, so great. So one of the takeaways is, okay, I traded the way I taught you how to trade, and I'm clearly over leveraged. But you've already heard where I said for every $100,000 in cash, I trade a mini lot. So you can, and I've said it before, and people laugh because there's really no leverage, right? Well, yeah, but I make thousands of trades a year versus a couple of hundred were right where and some of you guys are. So then I right so but if you then look at what happened, it shows that I'm over leveraged, and that's really you don't need leverage to make a lot of money in forex unless you don't have a lot of money, and then there's the problem, right? And then we get caught on the money all the time. So anyways, help me get the right message across, okay? And we'll do that on YouTube. I'll pull a trade and we'll talk. Well, I'll pull the report and then we'll talk about it. Cool. So, anyways, peace on earth. May the pips be with you. May your profits be above average. No, see you.